Imagine a Europe that presents itself as united in policy, yet divided in ambition. Spain, a country at the heart of this intricate puzzle, has just made a surprising move that is shaking up the continent. But what does this decision really mean, and why has Europe suddenly gone quiet? Spain has made a decisive shift in its approach to China, one that has left Europe largely speechless. No one expected this, and it's not just about cars. It's about power, influence, and the future of Europe's entire relationship with China. Just recently, Spain defied the EU's plan to impose hefty tariffs, up to 38% on Chinese electric vehicles, EVs. This bold move has sent shockwaves through Europe, a continent that was already struggling to find a unified response to China's growing market dominance. A few weeks ago, the EU's proposed tariffs seemed like a logical solution. With European automakers struggling to keep up with China's rapidly expanding EV sector, which produces cheaper and high-quality vehicles, the tariffs were intended to protect European car manufacturers. But then Spain hit the brakes, pulling out of the plan. Why now? Some analysts believe Spain's about-face is tied to its growing economic dependence on China. Recent data reveals that trade between Spain and China has surged by 15% in the past year. Spain now exports a substantial portion of its goods to China, 7% of its total exports, including machinery, electronics, and agricultural products. With these numbers, it's understandable why Spain would reconsider the EU's stance. Prime Minister Pedro Sánchez appears to be thinking long-term, carefully balancing EU solidarity with Spain's critical economic ties to Beijing. Sanchez's earlier meeting with Chinese President Xi Jinping this year was about much more than just friendly diplomacy. It was about trade, with both leaders striking deals that will further bolster Spain's economic relationship with China. Bloomberg recently reported a 12% rise in Spanish exports to China in the first quarter of 2024, with key sectors including agriculture and industrial machinery seeing significant gains. Meanwhile, Spain's automotive industry, which faces increasing competition from China's booming EV sector, is getting a reprieve. By rejecting the EU tariffs, Spain is buying time for its manufacturers to adapt to the new realities of the market. Political analysts argue that this move signals Spain's growing recognition of China as an indispensable trading partner. The South China Morning Post even suggested that Spain's recent diplomatic shift was heavily influenced by China's economic power, with Spain's economy becoming more intertwined with Beijing's influence. Europe's car industry has been struggling for years. Once home to some of the world's top manufacturers, the continent has seen its market share dwindle as Chinese companies, such as BYD and NIO, flood European markets with electric vehicles that are both more affordable and increasingly high quality. In 2023, Europe's car exports fell by 9%, while Chinese EV imports surged by 18%. Chinese brands have not only increased their numbers, but also scored higher in customer satisfaction in Europe, leaving their European counterparts scrambling. The EU's proposed tariffs were designed to protect its car makers, but Spain's refusal to go along with the plan could unravel the entire strategy. By doing so, Spain may be paving the way for European manufacturers to face even fiercer competition from China in the years to come. But Spain's decision comes with its own set of risks. Should China retaliate, the consequences could be severe, particularly for Spain's key sectors, agriculture and automotive manufacturing. China is the largest buyer of Spanish pork, purchasing over 40% of the country's exports, which accounts for more than £1.5 billion annually. A trade conflict could lead to retaliatory tariffs on Spanish agricultural goods, severely impacting an industry that supports over 300,000 jobs in Spain. Additionally, Spain is the second largest car manufacturer in Europe, after Germany, but it doesn't have the luxury car market that Germany does. Instead, Spain's focus is on mid-range vehicles, which could be vulnerable to cheaper Chinese alternatives. A trade war with China could drive up production costs, making Spanish cars less competitive globally. The stakes are high. Spain's agriculture sector, especially its pork industry, is critical to the rural economy, and it's deeply dependent on exports to China. Any move that threatens this trade could devastate rural communities. Professor Juan Moreno, an agricultural economist at the University of Seville, warns that any economic pressure from China could have disastrous effects on these regions. Spain's agricultural exports, including olive oil and wine, could also be at risk if China decides to flex its economic muscle in retaliation. China has a long history of using economic pressure as leverage, and it's unlikely to back down if the EU moves forward with tariffs. This delicate balancing act, between protecting European industry and maintaining vital trade relations with China, could define Spain's economic future. If Europe continues to fracture over these issues, Spain's position could create long-term challenges, both economically and politically. Ultimately, Spain's bold move may signal a shift in Europe's broader strategy, as the continent grapples with its changing role in the global economic landscape. The question remains, can Europe survive the economic fallout of these competing ambitions? Only time will tell. In 2023, Chinese consumers represented nearly 30% of global luxury spending, marking a significant force in the global economy. But as Chinese backlash grows, many companies are facing pressure that may force them to reconsider their entire business strategies. On the technology front, Europe exports billions of euros worth of equipment to China every year, and China is the EU's second-largest trading partner. Any disruption in this relationship could lead to severe consequences for both sides. China's economic influence has the potential to undermine entire industries, and if tensions escalate, Europe could find itself unprepared to cope with the fallout, as pointed out by Elizabeth Bra, a senior fellow at the American Enterprise Institute in a recent opinion piece. The EU's tariffs on Chinese electric vehicles could spark a trade war, which Europe may struggle to manage. Germany, with its major automotive industry, is particularly sensitive to this, as companies like Volkswagen, BMW, and Mercedes-Benz all have significant investments in China. Volkswagen, for example, sold over 3.5 million vehicles in China last year, accounting for 40% of its global sales. A loss of access to the Chinese market would be disastrous for Germany's economy. On the other hand, countries like France and Italy, less reliant on China for automotive exports, are more focused on protecting domestic markets from Chinese competition. French President Emmanuel Macron has been vocal about the need for tariffs, emphasizing that Europe must defend its industries from Chinese subsidies. This divide between Germany's cautious approach and France and Italy's push for stronger protections highlights the growing tension within the European Union. Spain's recent decision to oppose the EU's tariff proposal reveals the fault lines running through Europe, with countries like Germany and Spain prioritizing economic ties with China, and others like France and Italy pushing for protectionism. The EU's unity on this issue is increasingly fragile. The European Union is at a crossroads, with some nations advocating for deeper integration, and others, like France and Italy, calling for a more flexible, nation-first approach. This divide is more than just an economic issue. It has become a political one as well. The Economist recently described this as the Great European Divide, a dilemma that could reshape Europe's future and its relations with China. Now let's break down the numbers because they reveal the heart of the issue. In 2023, China's trade surplus with the EU reached an astronomical 400 billion euros. This imbalance is partly due to China exporting more to Europe than it imports from the continent. Europe continues to purchase Chinese goods, electronics, machinery, and electric vehicles, while China doesn't reciprocate in the same proportion. This growing surplus is becoming a serious headache for European leaders, and the stakes are high. The more dependent Europe becomes on Chinese imports, the more leverage China gains in negotiations. If Europe continues to rely on cheap Chinese products, what happens when China tightens its grip? It's a delicate balancing act, with Europe constantly on the defensive. Spain's decision to oppose the proposed tariffs on Chinese electric vehicles underscores the importance of its relationship with China. As the fourth-largest economy in the Eurozone, Spain sees China as an essential partner. In contrast to France and Italy, Spain is not as alarmed by the trade surplus, and is more focused on fostering strong economic ties with China. Spanish exports to China grew by over 15% in 2023, with machinery, agriculture, and pharmaceuticals leading the charge. Beyond trade, Spain is also benefiting from significant Chinese investment. In the past year, Chinese companies invested heavily in Spain, particularly in technology, infrastructure, and renewable energy sectors. Chinese direct investment in Spain exceeded 5 billion euros in 2023 alone. This investment is crucial for Spain's long-term economic growth. Spain's refusal to support the EU's tariffs is also a political strategy. The Spanish government is positioning itself as a bridge between Europe and China, hoping to play a central role in shaping future EU policies. By advocating for dialogue instead of conflict, Spain aims to carve out a leadership role within the EU, balancing the need for competition with the necessity of maintaining robust ties with China. Spain's approach to the tariffs issue is far from just an economic calculation. It's a calculated diplomatic maneuver. As the EU prepares to vote on these tariffs, Spain's decision has already thrown a wrench into the EU's plans. If Spain's opposition gains traction, it could lead to a fractured EU stance on China. Germany, already hesitant, could follow suit, which would weaken Europe's negotiating position with China. If the EU fails to impose tariffs, it could signal to Beijing that Europe is divided and lacks the unity it claims to have. On the other hand, if the tariffs pass, countries like Spain could face economic retaliation from China, further complicating the relationship. Spain's move is not just a headline, it's a seismic shift in the balance of power between Europe and China. With every diplomatic maneuver, the balance of power shifts eastward. Spain is playing a delicate game, positioning itself as a key player in the global economy and in Europe's future relationship with China. So, what does this mean for the future? Spain's refusal to back the tariffs may set the stage for a more nuanced, flexible approach to EU-China relations. As Europe's internal divisions grow, the global economy is watching closely to see how these tensions will unfold. Is Spain's move a sign of new alliances, or will it deepen the cracks within the European Union? Only time will tell, but the world is paying close attention to how this pivotal moment shapes the future of global trade. Stay tuned for more updates as the situation evolves. If you found this discussion insightful, don't forget to like and subscribe to our channel for more content on global trade and economic dynamics. Feel free to share this video with others, and check out our other videos for more in-depth analysis. Your support means a lot to us.